Hello and welcome to Wake Up and Smell the Mic S&P 500 and Q's review for Wednesday, July 5th, 2023. It's now the 4th. We start off in the S&P 500 weekly chart, as that is where it's all happening these days for the S&P 500. And we're looking back to the COVID crash era 2020. And if I was using combo sequential cluster back then, this would have certainly given us a clue that there was a strong uptrend going on by May 3rd for all the disbelievers. Look at all those recycle counts for combo cluster. And it was up here, was the combo cluster 11. I'll zoom into the current area now. First, we'll take a look at the sell risk levels in the weekly chart. They're at a elevated level here for the sequential cluster, phantom combo, and variable combo. Aggressive sequential, variable, aggressive sequential up there in the 4900 zone. And the phantom sequential, and variable sequential further up into the 4900 zone. And they're still valid from the topping era of late December, early January 2022 for January, and December for 2021. So those have carried all the way over, as there has not been a buy setup count 9 printed since then. So nothing there, and there's really been nothing till recently. And look at that, we're all the way up to the combo and sequential sell setup 8 count. So if price can manage to stay above this close on the 4th for end of day Friday this week, then we get to keep the 8 count. Then next week, if price can close above this close for end of day Friday next week, then the 9 setup end count will print. And it looks like it will have to close higher than this high to get the perfected arrow. But if it doesn't, it could eventually happen if it keeps pushing upwards and onwards. And the sequential cluster sell countdown is on the 12. You can see the arrows have been traveling on, and it's about to print the 13. So then we'll have the sequential cluster sell countdown 13 and the combo cluster sell countdown 13. And now for the topper of them all. So end of day Friday this week, the 7th, if there's a tick higher than this high from last week for this week, and then a close higher than last week for this week, then this will become qualified and confirmed, the relative retracement up to the disqualified momentum up, which is now qualified for 50% and 100% will become qualified and confirmed, along with the relative retracement up 1 that will become qualified and confirmed. You can see so far the high is 4456.46 and last week's is 4458.48, so that's close. And I believe it's already above the close of last week, 4450.38 and 4455.59. So if price can tick higher a little bit, get above that high and hold that close level, or stay above this close level, then all of these will become qualified and confirmed. And that, folks, would be monumental if that happens. If it doesn't happen, that will surely be disappointing, and expect more downside. I would imagine that would be just so frustrating to happen after getting so close for so long it took, and with a tick higher than this high from last week. The D wave, up wave 3, and the C will shift over to here, and the wave up projection for D wave, up wave 3 will extend further. So this is the marks level here, 4630.43, using highs and lows. And again, my projection using closes is 4478, so that's really a big difference. And price is just slightly above the channel 3 high by 20 cents or so. So it's really struggling. And then the Bollinger Band, upper band, is at 4477.25. So that is above the level for ticking higher, but there's a lot of resistance here. And qualifying and confirming will be the drama of the week. It'll be a real nail biter, I just know it, for Friday the 7th. And so to the downside is very similar to the Qs. There's the mid band of the Stark band, and this ongoing demand line, which we just use as a support line. So this level in the Stark band will be very good support. If it breaks it, then there's the conversion line underneath it, complete meltdown, and then the lower Stark band and the channel 3 low is there. This is similar to the Qs. And for those that are really curious about how DeMark and myself get these levels, so they use the highs and the lows. So you would take the high of D wave, up wave 1 here, and subtract it from the low of D wave, up wave C down here, and then multiply that by 1.618, and then add it to the low of this low of D wave 1, which is the C, and you will get this level here. And then do the same thing using closes. This is the one that I use, so the close up here, subtracted from the close down here, multiplied by 1.618, add it to the close down here, and then you'll get my level of 4478.49, which is more realistic for right now. And again, that's right up there by the Bollinger Band. So yeah, that's really stretched to the limit, this S&P 500. But if it can really pull that off and then have the downdraft, and that would be the buying opportunity down here by the lower Stark bands, or even the baseline could get a big downdraft after that happens, because of it's just too tired or whatever. Might not even make it down that far, but on a big downdraft, that would be a buying opportunity if that becomes qualified and confirmed for end of day Friday.